Good morning. Welcome to the E3 Live Market Report. I'm Pat McClatchy. Thanks for joining us today. We'll be getting started in just a couple of minutes as the export report comes out. We'll review just a second what we're going to do. At the moment, we've got the dollar down 37. That's typically supported for markets. But today, not so much so. Gold is down $3, and we've got crude oil down $1.20. We are, at the moment, we have cotton up about 34 to 35 points. Soybeans down 5, corn down 2, wheat down 3.5. Today, we'll go over exports. Then after that, we'll look at the breakdown. We'll talk about the market over the last week. And then we'll go over a report put out by Plexus Cotton that talks about a possible squeeze in the cotton market. And I want to read from that and point out some things that I think are interesting. The report last week, our export report last week, was somewhat light in markets, with the exception of cotton. You know, last week cotton was 177,600. The wheat number at 100,000, corn at 435,000, and soybeans at 505,000. And so we're looking for probably not as good numbers in cotton, but we're hoping for some improvement in our grain and oilseed. So we'll be looking at that in just a moment. We're continuing to sell off in soybeans as we get closer to the exports. We're down 6. Here we go. Cotton. The cotton number was 61,200 bales. As we said, we were looking for a lighter number than last week. That's still a good number considering the tightness in cotton right now. And cotton's really not reacting. We're up 42 at the moment. Looking at the wheat number, 162,100. A little better than last week, but still not a good number. Wheat market down about 4 at the moment. Let's just see if we're getting our export breakdown. Then we'll go to corn. The corn number, 406,600. That's actually a little better than last week. The bean number was a very light number, a disappointing number at 27,400 for soybeans, although it looks like they're switching over to new crop. New crop had 568,300 metric tons. So that's a good number for new crop. Let's look and see here. We do have our breakdowns coming out. Let's look and see who did the buying this week. Of the 61,200 running bales for cotton, that's down 66% from last week and down below the 30% lower, 37% lower for the 4-week average. Vietnam took 31,600. Mexico took 13,700, and Turkey took 8,800. And good shipments of 300. Actual shipments of 325,300. Let's go to cotton to see. We haven't really moved. We're still up about 41 to 42 there. The wheat number, 162,100. That's actually up 58% from the previous week, but down 54% from the 4-week average. The Philippines took 95,000 metric tons. Thailand took 52,200 metric tons. And Mexico took 48,100 metric tons. And reaction in the wheat, we're pretty close to the same. We're down about 3.5 to 4 in the wheat market. Let's go to corn, 406,600 metric tons. It's down 7% from the previous week and down 26% from the 4-week average. We had Mexico taking 234,600 metric tons. Colombia took 99,600 metric tons. And Barbados, well, no, I'll switch to Japan. Japan took 58,300 metric tons. And the reaction so far in the corn has been down about a half cent from where we were before the number came out. Soybean number, light number at 27,400. That's down 95% from the previous week and down 92% from the prior 4-week average. Breakdown, 102,600 from Mexico. Malaysia took 24,300 metric tons. Colombia took 10,800 metric tons. Looking for cancellations. Well, some cancellations, but not a lot. Looks like 51,000 metric tons of cancellations, which is not particularly big for soybeans, but still a very light number as we see switching from the U.S. to Brazil for export needs. And the soybean market has not taken this well. We're down about 8 right now in soybeans, so we've dropped a couple of cents. So in review, we continue to see light numbers for grain and oilseed. The cotton number, although less than last week, was still a respectable number, and you're seeing a reaction to support that. Looking at the last week and just commenting on the markets, what we've done over the last week, starting with soybeans. Just a moment. Give me just a moment to find some of our information here. All right, looking at, start off with cotton. The cotton market over the last week, we've had our acreage guesses that came out here a couple of days ago. The number came out at 9.399. That's the lowest acreage estimate in 6 years. That's 13% less than last year. I think the market was probably looking for a little bit more of a cutback in that, maybe 14% to 15%. Given the highlights of this, Texas is estimated to cut back acreage by 8%. Georgia, another key producing state for cotton, is listed as possibly cutting back acreage by 20%. And Mississippi looking to cut back acreage by 18%. And with this number that came out 2 days ago, the market did not do anything for about 30 minutes and then suddenly exploded to the upside. We got up 130 to 140, but that day we backed back off and closed up about 60 on the day. So that's that was some of the key news today, this week. Looking at soybeans, the soybean report showed acreage estimates of 84,635. That was shy of the trade projections of 86 million acres, and beans reacted in a positive way and closed higher on the day. Corn, the acreage estimate was 89,199. That was down 2% from 2014, but 400 million acres above the projection. And corn took that very poorly and sold off, and has been struggling since then. Looking at the markets and talking about what to expect from here, continue to expect to see possibly beans moving up and corn moving up, and wheat following them, all reacting, of course, to the dollar, and the dollar is down some on the day. Hopefully, the dollar will continue to consolidate and maybe move lower. That will help these commodity markets lift up some. So we're expecting all the grains to possibly do better over the next month. Cotton market's been a sideways market. It has seen good support from mills as it sold off towards 60 to 61. But as the market rallies, the mills don't chase the market and continue to buy cotton. They want to buy cotton as it retreats back toward those lower levels. So it makes for a sideways market. Continue to think that cotton's got a chance to move up. I think cotton does have a chance over time to move into the high 60s, and maybe new crop cotton, looking at it over the months, could move up and test the 70-cent level. So that's just generally an outline of the key news this last week and kind of what we're looking for. I want to talk about a newsletter and read some excerpts from it. Plexus Cotton is written, this newsletter is written by Peter Igley. He puts out a weekly newsletter, and it's always very good. And Peter wrote this last week, but I wanted to go back and read parts of it because it does address the possibility of a squeeze in the market. And squeezes are nothing new. They're always discussed. But he brings up some interesting points. So I'd like to read from this. Over the last 2 months, during which the market rallied from 58 to 66 cents and then dropped back to 60 cents, the outright spec long position has ranged from 6.1 to 8.8 million bales, whereas outright spec shorts span from 3.5 million bales to 9 million bales. The way we read this is that most spec longs stood their ground during this recent up and down swing, while spec shorts were a lot more fickle crowd. When we look at total open interest in futures and options as reported by the CFTC, we have currently 19 million longs and shorts opposing each other, not counting the 3.8 million bales reported under spreading. If we assume that 5 million of these bales belong to new crop, it still leaves 14 million bales of current crop that need to be squared away before July goes off the board in 3 months from now. Considering that the certified stock is currently at just over 9,000 bales compared to 255,000 bales a year ago, that's an interesting point. Let me read that again. Considering that the certified stock is currently at just over 9,000 bales compared last year to 255,000 bales a year ago, and that today hardly any tenable grades remain for sale, we feel that the shorts are playing a rather dangerous game because they are short something that isn't really available anymore. The trade, who owns most of the short positions, nevertheless remains quite complacent based on the notion that conditions in the physical market don't warrant higher prices. While it may be true that most foreign growths don't have much pricing power at the moment, it won't help a short in New York that India has plenty of cotton available, unless existing U.S. export commitments were to get swapped for Indian cotton, which is unlikely at this point. So where do we go from here? It seems that we have a standoff between longs and shorts, with neither side ready to give in. As pointed out above, spec longs seem to have some staying power and are willing to withstand declines. This could put the shorts in a precarious position because they clearly have the weaker hand in this poker game. Although a lot of the trade shorts are tied to physical positions, be it on-call sales or basis long positions of various origins, the New York futures market needs to be looked at in isolation, since only U.S. cotton is allowed for delivery, and there's hardly any such cotton available anymore. Those are comments from Plexus Cotton, written by Peter Igley. I think it brings up some excellent points about the cotton market and the vulnerability that shorts have in the market and the possibility that we could see a market moving up and at some point possibly even see a squeeze. As I look over at the market, right now cotton is up 65 points in May, up about 63 in July, and December's up about 59. So we're starting to see the market firm up from what I think is probably an encouraging export figure, and the dollar being down 25. From the time we started this broadcast until now, we've seen the dollar continuing to weaken, and that I think has helped support some of these other markets. So that really concludes our meeting for today. I do want to remind people that this next week we will have a new program that we're doing, the day of the crop report, which is next week on the 9th. We'll come on about 15 minutes after the crop report, and we'll do a breakdown of the report and see what the reaction of the market is. That's on the 9th of April. We'll be doing that. Then the next day, we'll do what we usually do, which is our monthly Ag Market Network teleconference. We'll be joined by Dr. John Robinson, who will review our crop report with regard to cotton. And we'll also have a special guest in Bob Antashak, who will talk to us about cotton, about the future of cotton as he sees it. And that should make for a very interesting program. We hope that you'll join us. Thanks for being with us on E3 Live Report, and we hope to see you again next week. Thank you.